Hey everyone, welcome back to the channel. If you've been following the latest developments in Iraq's financial markets, you know there's a lot happening right now. In this video, we're going to break down some critical updates, including a massive $5.05 billion worth of US dollar sales by the Iraqi Central Bank in January 2025 and the latest fluctuations in the exchange rate of the Iraqi dinar. These events could have big implications for Iraq's economy and the value of the IQD moving forward. So, stick around as we dive deep into what's really going on and what it means for the future of Iraq's economy. Alright, let's start with the big news. The Iraqi Central Bank, CBI, recently reported total sales of more than $5.05 billion in US dollars in January 2025 alone. According to official data, the bank sold exactly $5,533,803,804 in hard currency, an impressive sum and one that signals a lot about Iraq's financial strategy and goals. Now, let's break down what these numbers mean and why it matters. So, what does this $5.05 billion figure actually represent? Well, a significant chunk of it, about $5.02 billion, came from foreign exchange sales. And this is where things get interesting. When you think about foreign exchange sales, it's not just about Iraq purchasing or selling currency. It's about managing the supply and demand for foreign currencies, especially US dollars, to stabilize the market. This figure is particularly important because it represents a 93% increase in foreign exchange sales compared to the $320 million in cash sales. What's even more notable is the difference in the exchange rates used for these two types of sales. The CBI applied a base exchange rate of 1310 dinars per US dollar for documentary credits and international settlements of electronic cards. For foreign transfers and cash transactions, the exchange rate was slightly more favorable, 1305 dinars per dollar. Now, why is this important? These exchange rates are critical indicators of how the CBI is managing the supply of US dollars in Iraq. By offering different rates for different types of transactions, the CBI is able to maintain some level of control over the liquidity in the economy and keep the exchange rate relatively stable. These moves by the central bank also highlight Iraq's ongoing efforts to manage its foreign currency reserves while also dealing with the global volatility that often affects economies in the Middle East. The CBI is trying to balance the needs of businesses, individuals, and the government in a country that still faces significant economic challenges. So, what does this massive dollar sale mean for Iraq's economy? Well, one of the primary reasons for this huge volume of dollar sales is to stabilize Iraq's financial system. Iraq's currency reserves are heavily dependent on oil revenues, and by maintaining a healthy supply of dollars, the central bank can ensure that there's enough liquidity to keep the economy functioning smoothly, particularly for international trade, imports, and settlement of foreign debts. However, this kind of dollar activity also signals that Iraq may still be somewhat vulnerable to external shocks, such as fluctuations in global oil prices or any geopolitical instability. This is something that Iraq will need to address in the coming years if it wants to ensure long-term economic stability and avoid becoming overly reliant on one form of income, like oil exports. We've seen how volatile the global oil market can be, and with Iraq's energy sector being its primary revenue driver, it's essential that Iraq diversifies its economy. The central bank's moves could be viewed as an attempt to buffer against these challenges, ensuring that Iraq has enough dollars flowing through its economy to prevent shocks from destabilizing the dinar. Now let's talk about the exchange rates themselves, and this is where we're starting to see some significant movement. The value of the US dollar against the Iraqi dinar has been on the rise, with the closure rates of the dollar edging higher in Baghdad. On Tuesday, the value of the dollar in Baghdad's central Al-Kifa and Al-Harithiyah stock exchanges increased slightly, settling at 150,400 dinars per $100. Just earlier in the day, that rate was 150,250 dinars. This small but important increase shows that the dollar is gaining a bit of strength against the dinar. But what's more interesting is that the rates in Erbil have remained relatively stable. For example, the selling price in Erbil stood at 150,150 dinars per $100, while the buying price was slightly lower at 150,050 dinars. Why are these changes important? Well, fluctuations like this can signal shifts in market sentiment. If the dollar continues to rise, we might see inflationary pressure, which could make goods and services more expensive for consumers in Iraq. This, in turn, could put more pressure on the central bank to act. In Baghdad, the selling and buying rates at currency exchange shops have been notably different, with selling rates reaching 151,500 IQD per $100 and buying rates sitting at 149,500 IQD per $100. This kind of disparity in the exchange rates suggests that currency exchange markets are feeling some tension and potential volatility, which could be a sign of either demand for US dollars or uncertainty in the local economy. These trends show that there's a lot of movement in the dollar-dinar exchange rate right now, and while the shifts might seem minor, they could have a significant effect on Iraq's economy, especially for everyday consumers and businesses who rely on stable exchange rates to plan their expenses and investments. So, what's driving these changes? Several factors could be at play here. First, there's the ongoing demand for US dollars in Iraq, especially for imports, international transactions, and paying off foreign debts. There's also the pressure of inflation and regional instability, which could be causing people to seek out US dollars as a safer store of value. We also need to take into account the impact of Iraq's geopolitical situation. The country's relationship with its neighbors, including Iran, and its economic dependence on oil could all be influencing the demand for dollars and its effect on the exchange rate. Given Iraq's vulnerability to oil price fluctuations and political risks in the region, it's clear that there's still a great deal of uncertainty about the future of the Iraqi dinar. If the dollar continues to strengthen, we might see additional pressure on the dinar, which could mean more volatility for investors. So, what should IQD investors take away from this? Well, Iraq's dollar sales are a sign that the central bank is actively working to manage the flow of US dollars into the economy and potentially stabilize the dinar. But with the dollar edging higher in exchange rates, there's still a lot of uncertainty. These fluctuations could have short-term impacts on the value of the IQD, and it's important for us as investors to stay informed about any further changes. At the same time, these movements in the exchange rate also show that Iraq's financial system is still adjusting and evolving. While the central bank is doing what it can to ensure stability, Iraq's future economic growth and the value of the dinar will depend on a wide variety of factors, from oil prices to investment in infrastructure to how the country manages its foreign exchange reserves. So, what do you think about these recent developments? Are you concerned about the rising value of the US dollar against the dinar, or do you think Iraq is on the right track with its economic strategies? Let me know your thoughts in the comments below. I'd love to hear what you think. If you found this video helpful, don't forget to like, subscribe, and share it with anyone who might be interested in the future of Iraq's economy and the IQD. Thanks for watching, and I'll see you in the next video. Stay informed, stay safe, and always keep an eye on the markets.